The S&P 500 last week had one of its worst performances in the whole of 2024. In fact, Nvidia alone was down around 9%, and when we zoom out to look at the last month, it didn't have a great performance, down around 16%. And today's episode, we want to find out, is it still undervalued and can we expect some massive future gains for this semiconductor company? Now, one of the reasons why it did fall just last week, we saw that dip, was essentially a ramping in the US of geopolitical tensions. We had, in fact, Biden's administration talk about a wide sweeping rule to clamp down on any companies that are exporting their chip-making equipment to China. And we also had Donald Trump chip in to the Taiwan situation, saying that they should be paying the US for defense. Now, that wasn't great for not just Nvidia alone, but also the semiconductors. In fact, 49% of ASML sales do come from China, and the bearish news didn't stop then. We also, in fact, had last Saturday Goldman Sachs talking about how AI is too expensive and unreliable, and a lot of firms that do use a lot of these products asking whether or not, in fact, it is massively overhyped and if they will ever see the payoff of their very large investments. Now, the bearish news again didn't stop. Goldman Sachs just last month released an article talking about there is a lot of spending that is going on with these companies, and at the moment they aren't really seeing the benefit of all of the discussions of AI. Now, I'm sure you would have heard of the word the bubble, and in fact, just on Friday, given the fact that the majority of these companies have been heading downwards nearly double digits, there is that discussion of whether or not we are in for the mother of all tech stock crashes. Now, just finishing off with one final piece of bearish news, whether you consider that or not, we see more insider selling. In fact, insider ownership alone sits at 4.23%, 725 million worth of insider selling over the last year, with a fairly trivial amount of buying during the same time period. Now, you could argue, which is a fair argument, that over the last few years there has been constant selling by insiders, so it is no surprise that this trend does continue. In fact, you'd have to go to Q3 of 2022 before you would see no insider selling. And when we do take a look at who these insiders are, well, as I'm sure you're aware, the CEO himself has been continually selling his shares in tranches at 120,000 at a time. In fact, just last week, he netted around $14 million, as we can see on the 17th of July. A few days earlier, again, he has continued to sell, netting himself another 15 million. Now, we don't see this necessarily as bearish news. One, this isn't a large portion of his shares that he holds, and two, they will sell typically personal or financial reasons. So again, not something we would massively focus on, but we do want to be transparent. Now, turning into a little bit more bullish news, we do see the institutions, which sits at around 65% ownership of Nvidia, around 8.5 billion worth of sales over the last year, but significant amount more buying over the same time frame. And what we will also point out, in the more recent quarter, Q2 of 2024, much more buying. In fact, 31 billion with only $150,000 sold. So again, very bullish if you do believe that institutions is a good indicator of where a company is heading, as well as the faith that they do place in the CEO as well as the stock. Now, as always though, don't focus on what insiders or institutions do, and before you do invest in any company, always do your own due diligence. One other piece of news that we did hear about just last week is the fact that Servo Robotics, the stock itself, soared massively, 241%. Reason for this? Well, Nvidia did disclose a 4 million stake within the company, and for those that haven't heard of this company, effectively what they do is that they focus on self-driving delivery vehicles for what they call the last mile deliveries, and as we can see again, so a very bullish sign in terms of Nvidia looking towards the future. Now, in terms of the company itself, well, just for those that want to see the dividend safety score, it does sit at 89. It is very safe. Granted, the yield itself is very small at 0.03%, and it is a 2.9 trillion mega cap company. Now, we'll come on to the dividend growth very shortly, but effectively, for those that are interested, very safe dividend score does mean that a dividend cut is highly unlikely. Now, the last recession, now this is something that's interesting. A lot of people do talk about another recession incoming very soon. 07-09 was the last great recession. They didn't pay a dividend, so we have no comparative data, but in fact they have negative 35% recession sales, well below the average of the S&P at around negative 12, and they also significantly trailed negative 78 with the S&P coming in at negative 55. As we mentioned, they did recently grow their dividend very rapidly, 150% in May this year, and over the last 10 years, on average, it has increased by 7%. Now, in terms of dividend yield theory, it isn't one we typically look at for Nvidia, given, as we mentioned, a fairly trivial one. What we would draw your attention, though, is to the forward PE, which we see at around 41 versus the 5-year rolling of 42. So it isn't too far off. If you were to look purely valuation basis on the forward PE, you could argue reasonable valuation. Also note, though, the information technology sector is much lower at 26.7, and we are going to come across the valuation as well as others in the sector to see whether or not it is warranted that Nvidia does trade at a premium. And just to point out that on the free cash flow basis, where we look for 50% or lower for semiconductors, for Nvidia, this dividend that they do pay out is only 1% of their free cash flows, very, very small, which does mean if they wanted to, they could continue to increase it triple digits every single year. Free cash flow, very important metric that we like to focus on the channel. We want to see increasing consistent free cash flows year on year. Now, it does look very strong, very healthy. One thing we would point out, though, the massive run-up has only occurred just in the last year. 15 cents per share in 23, 109 in 24, and the expectation over the next 12 months is meant to be more than double at 259. That is more than a 100% growth to their free cash flow. In terms of their sales, well, recently it has been very strong, but when you do look over the longer term, it has also been nearly double digits every single year if you do average it out, and we can clearly see when looking at this numerically speaking, it has increased rapidly from 5 billion in 2015 to 61 in 2024, looking very strong in the trailing 12-month basis, meaning that we do anticipate a massive growth again into 2025. On the shares outstanding, what we like to see here is essentially when companies do share buybacks returning excess cash, pretty much over the longer term, they would have diluted your position, but as we will come across to over the last 10 years, during this same period, the share price has increased rapidly and therefore you probably wouldn't care about this minimal share issuance. ROIC looking absolutely fantastic, above 12% for semiconductors, giving us faith that the management team are able to effectively allocate their capital. In fact, above that every single year, 61% in 2024. On a trailing 12-month basis at 78%, this is probably the highest we have ever seen of this metric of any company. So again, very, very positive to note, especially if they can consistently keep it that high moving forwards. Margins also look good. What we would say here, not only above the minimums, but that is operating efficiency, going from 16% in 2015, 54% in 2024, moving in the right direction, as well as increasing their top line. And free cash flow, if they can continually keep it at the level that they have right now in the 40s and the 50s, this will be, again, a very strong, what we would call here, a free cash flow machine. Finally, the net debt to EBITDA, you're not going to get a metric better than this. Earnings before the interest, tax, depreciation, amortization. The numbers, or we should say the lack of numbers below, show essentially the number of years it would take the company to pay off all of their debt net of cash on hand. Below 1.5, basically signaling to us it wouldn't even take Nvidia one day to pay off all of their debt net of cash on hand. Absolutely phenomenal. Now let's go back to the historical performance. We did mention it is down around 16% over the last month. When you do zoom out over the last year, it is up more than 150%, and over the last 10 years up 26,000, probably one of the best stocks in history over the last 10 years. We also note it is trading in the upper end of the 52-week range, even with the pullback we have seen over the last month. And again, Wall Street do continue with their strong buy rating, although both Seeking Alpha and Quant do not agree with their hold. As we mentioned, very small yield, and the forward PE does sit at 43.1. Now, when we take a look at the numbers, not just the revenue that we like to focus on the channel, but also the bottom line net income, we already discussed the revenue. It has increased, although the majority of that increase has just occurred over the last year. But we also like to look at the makeup of the bottom line, the net income, going from 631 million in 2015 to just under 30 billion. And as we can see on a trailing 12-month basis, it is expected to be around 43 billion. So we are expecting an incredible growth to both their top line as well as their bottom line. But again, same thing does apply here on their bottom line. Massive growth has just occurred over the more recent year. Now, one thing that we also like to do on this channel, a quick health check, total cash versus total debt. It has gone from 4.6 billion to 31 billion. So similar to pretty much every single other metric, their revenue, their bottom line, it has been increasing over the longer term. And why we like to look at this, in fact, we compare it to their total debt just to see the health of this company, both numerically and directionally, because ultimately just looking at one balance, whether it's cash or other balances, doesn't really paint a true picture. So their total debt, 1.4 billion to 11.2, and again, whilst it has been increasing over the longer term, their cash balance is a lot higher, and as we saw on the net debt to EBITDA, 0, indicating it wouldn't even take them one day to pay off all of their debt net of cash on hand. Now, their latest earnings that did come out was on the 22nd of May, and what is interesting to note, they've now announced essentially their next quarter's earnings. It's going to be on the 28th of August, and it will be on the post-market. So do subscribe to this channel. We will do an in-depth look when that does come out. Now, in terms of looking at how this company has performed historically, well, effectively, they have beaten every single quarter over the last year, and over the next quarter, they're anticipating triple-digit growth year on year. Now, what will be very interesting to see is, will they continue that beat to management estimates, and will the share price increase because of that? In terms of January 2026, when we do look that far out with their EPS estimate, forward P is anticipated to come all the way down to around 32. Do let me know whether or not you think that is a lot more reasonable and in fact more attractive, or in fact at this price as well, you do still see looking good at a 43 forward P, given the growth as we're about to come on to that is baked into this company. We then move on to some underlying metrics. The first one, the valuation, where they get an F. Now, every single valuation metric that you look at is going to be completely poor. Main reason for this, as we can see the sector median, for example, the forward P of 43, sector median much lower, essentially telling us that Nvidia is trading at a 78% premium. Again, if you would look at others, for example, a price to sales 24 with the sector median at 3, a 711% premium. Nvidia is valued at a much higher rate than the sector median. Again, whether or not it is warranted and at what level it should be warranted, that is something that we will come to in our valuation, as well as something you need to consider in your own investment thesis. Well, what is interesting to note, on the growth, they do get an A+, year on year, 208% growth, sector median 3%. Okay, so we already understand one reason why it is valued much higher. In terms of forward looking, still very high, not triple digit, but still 82%, sector median at 7%. And when we look at the earnings per share estimate over the next 3 to 5 years, 33.48 versus the sector median of 14. So again, we can understand why this company is valued higher. And another reason is the profitability, very strong at an A+. Gross profit margin, 75%, sector at 49%. Bottom line, 53%, sector at around 3%. And what I find incredible about this company, their cash from operations, 41 billion, with others in the sector at 95 million. So very interesting to note when you do compare it to the sector and not just look at it on a standalone basis. But in overall summary for this part of the analysis, a continual strong buy rating from Wall Street with a double hold from Seeking Alpha and Quant, F on the valuation, A+ on growth, and an A+ on profitability. Now, how do they compare against others in the sector, especially given the drop that we had just last week? We have Taiwan Semiconductor, Broadcom, AMD, Qualcomm, TXN, some very big names in this space, and all of these that we have reviewed on the channel not too long ago. Well, Nvidia, they are up 151%. Again, a massive outperformer against others in the industry. When we expanded over the last 5 years, again, same theme to be said here, as well as over the last 10. So even after the drop this year, so if we just look at the last year, it is still the number one performing in the semiconductor space. And when we look at over the last month, they are actually one of the semiconductors with the biggest drop, negative 16%. When we look at Qualcomm, they are pretty much right there as the worst, negative 16. So as we can clearly see, they are the ones that were affected the most, Nvidia and Qualcomm. As always though, do bear in mind when we did look at the last 10 years with the fantastic outperformance, it doesn't mean it will happen over the next. Always understand that past performance is not an indicator of future performance. We also want to show you just how quickly their revenues have grown over the last few quarters. If you go back essentially to Q1 FY24, their total revenue was 7.2 billion. And when we fast forward a year to Q1 FY25, we're looking at 26 billion. In fact, just going quarter by quarter, we can see massive growth with these numbers. And what will be interesting, will that trend continue into Q2 FY25 when it is released in 4 weeks' time? Major increase though has come from the data center. When you do take a look at the numbers, that is where the growth is being driven from. So that will be one that will be closely looked at by analysts. How has their data center revenue performed in Q2? And one thing we wanted to point out from one of their latest investor presentations, they do believe that essentially there is a 1 trillion long-term market available, with one of the largest parts of this being the autonomous machines at 300 billion, as well as the data center systems at the same amount, which they are clearly in the driving seat for, where they're increasing revenues at a very rapid rate. Just something interesting to note. Now, talking about interesting things, we just wanted to bring to your attention, as we just heard about this not too long ago, that the Las Vegas Sphere is being powered by around 150 Nvidia GPUs. Something that we thought was very interesting, whether or not that you know that, something that was brought to our attention. Now, finally, before we look at the valuation, again, as we mentioned, over the last year was where they saw the majority of their growth. Their revenue up triple digits, their gross profit margin up 14.6 percentage points, which is very impressive, as well as their operating income and their earnings per share. Now, before we do take a look at the valuation, just to let you know that we've released our latest free weekly article. If you want access to this or any other articles, it is all completely free. You can click on the pinned comment below, instant access, and you can read straight away. In fact, our undervalued dividend kings also comes with a free spreadsheet, so do check that out while you can. We then move on to the valuation. Now, as always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Our intrinsic value is $140. Now, this hasn't changed in quite some time. The reason we get to this value is we do put it through our discounted cash flow valuation model, and what we've noted is the average growth over the last 10 years at 94%. Now, we've gone for 3 different targets, a low, medium, high looking forwards at 25, 30 and 35%, and we've selected the medium rate at 30%. With the discount rate, we get the present value of future free cash flows and terminal value, which we add together with the cash, subtract total debt, get to the equity value and divide by shares outstanding to get to our intrinsic $140 value. Now, this does imply from today's market price 19% upside, but if you believe that is way too optimistic, then at 25%, this would come down to around $101 with negative 14% downside, and there will be people that say, no, that is too pessimistic, you should be looking at around 35%, and as you can see, that would imply 63% upside. As always though, you can grab a copy of this model by clicking on the pinned comment below. You can play around with the numbers, whether it's for Nvidia or for any other company. For example, at 40%, this would mean that the share price has more than double the upside from the current market value. So moving forwards, we are going to take through the medium rate of 30%, and ultimately that does give us the intrinsic value of $140. And what we like to do on this channel is do a margin of safety, and then we use a margin of safety of 10%, which we execute on the stock if it meets our 3 golden criteria: a wide moat, strong financial metrics, good forward-looking data. If you believe that, well, it is a buy up to around $126. But then again, we keep going until it's near the current trading price, and we can see in today's episode, Nvidia is trading at a 15% margin of safety. On top of that, Wall Street do see around 20% upside. Their price target over the next 12 months is $141.50. Now, people will be interested in this company but want a larger margin of safety. At 20%, it would be around 112, and for those that are looking at 25, it would be around 105. As always though, do let us know your thoughts below. So as we said, a 15% margin of safety in today's episode with 20% upside per Wall Street and their target. And for those that are interested in Nvidia but want to have a bit more security, you can look towards a semiconductor ETF, for example SMH, a very popular one. In fact, Quant do give it a strong buy. This has an expense ratio of 0.35%. It does have a yield, although fairly minimal, at 0.42%, and over the last year still up around 56%. Now, one of the reasons why we say this could be an attractive one if you do like Nvidia, because when we take a look at their top 10 holdings, Nvidia is their top with around 20% allocation. So definitely something to consider if you do want to take a look at the semiconductor space, but maybe don't want to pick any stocks. As always, let us know your thoughts about today's episode. Are you looking to buy Nvidia? Maybe it's one you're looking to sell or on the watch list. And if you enjoyed it, value was provided, smash that like button, hit that subscribe and bell button, and we'll see you all on the next one.